Good morning. It's Wednesday, June 18th. Will the animal spirits drive silver to $40 and beyond? That's the big question here, because remember yesterday we had that information on the tax bill, the solar spending, things like that, and really that dampened those stocks, and much of the demand for silver comes from solar. So we've been adding some September silver call spreads close to a 25-to-1 payout in our Global Opportunity CTA program. If you'd like to know more about our CTA, and that stands for Commodity Trading Advisor, and the Global Opportunities program or the silver strategy, reach out to info@bluelinefutures.com. So good morning. It's Wednesday, June 18th. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. Something else, my partner Bill Baruch, he'll be on CNBC at 11 a.m. Central Time for the full hour block, discussing some of the portfolio moves, some of the top investments, and the outlook for key holdings in our wealth management portfolios. I've seen he made some moves here on some of the equities in the overnight session into yesterday that are posting today. So if you'd like to learn more, please send an email to me at phil@bluelinefutures.com about some of our wealth management solutions. Now, overnight news, an overnight meeting between U.S. President Donald Trump and the National Security Team has sparked speculation that the U.S. may join Israel in its attacks against Iran. Trump has demanded that Iran's unconditional surrender and has threatened a potential strike against the country's leader. In response, Iran has reiterated its intention to respond with force if the U.S. becomes involved. So the strikes between Israel and Iran have now continued for 6 straight days, with both sides showing no signs of stopping. Additionally, the U.S. announced a meeting with Pakistan's army chief. It's a key ally to Iran to discuss potential mediation. So you look at checking in on the markets and the market reaction. September S&P hanging on to the low at 60.17 3/4 before bouncing back up. We're at 60.44. High was in the start of the overnight session at 60.62 3/4. So you look at the chart pattern on the S&P 500. Really, the critical level here would be last Friday's low. So that's going to be the June 13th low, and on the September meeting would be that 59.79. If we take that level out, it could really open the market up for a larger sell-off, in my opinion, down to where those key levels of support, and there's a double bottom. Remember, we came into that one Friday here. It was back on May 9th, and then we get the Sunday open on May 12th, where the S&P 500 gaps higher. It's that gap and that low is the critical level that I'm watching, and that I would call is the ultimate line in the sand. I think Friday's low is kind of a smaller line in the sand, where if we break that, you're probably going to see a lot of stop losses get triggered. You'll probably see some people flip, go to the short side, and also lighten up some positions here. So not specific advice here and recommendations out to the public, just some insights here on what I'm thinking on these markets, because the chart patterns, you look at the news flow, and it's something you want to take into consideration is the news flow, the fundamentals, what's going on in the economy, and then the chart pattern. And the chart pattern really dictates the signal, and the signal overrides your emotions and things like that. You want to have a process here where you could keep your emotions aside and you could trade with the flows of the market. Remember, be like Bruce Lee, be like water, flow with the market here. So, and I believe that we could see a bit of a waterfall approaching if we do approach that Friday low, and then ultimately that double bottom here on the charts. Now, the key level to watch, again, 59.79. That was the Friday's June 13th low. So the economy, looking at the economic data here, we're going to have housing starts, building permits for May, weekly jobless claims here at 7:30, followed by a Fed decision at 1 p.m. So the equity market reaction to the FOMC is supposed to be a bit limited. The question remains, and even President Donald Trump is saying that, and every time I mention Trump, it's Google Analytics suppresses my video and everything else. So I find that really funny. So when will the Fed officials have enough clarity to make a determination on the net economic impact of Trump's policy changes? So the Federal Reserve is widely expected to keep these interest rates unchanged here, according to recent surveys, and most economists believe that it will take until September. So you want to look at the CME's Fed Watch tool, and all you got to do is go to Google and type in CME Fed Watch tool. You'll scroll down, you'll see it'll default to June 18th, which is today, and it'll tell you that there's a 99.9% chance that the Fed doesn't cut rates. What you want to do is start clicking on the tabs, and you can see where we're currently at here as far as interest rates, which is 4.25 to 4.5%. You look at that July meeting, 14.5% chance that the Fed cuts 25 basis points. It's really when you get to September is when you have a greater than 50% probability that they cut rates. So 54.8% chance that they cut 25 basis points and an 8.2% chance that they cut 50 basis points. So that's where things really shift in the policy and everything else like that. So you want to see here that they believe until September is when it's going to take to assess the impact of economic trade, immigration, spending policies. And the key here today is what we're going to want to watch here is the dot plot here. So that gives the summary of economic projections, and it'll provide the first updates on estimates for growth, inflation, employment, and interest rates since March. So officials may still indicate plans for 2 interest rate cuts this year, as many forecasters anticipate. However, there is another group of people that really believe that the dot plot may only reflect 1 interest rate cut. That dot plot change is really what's going to move these markets. So it's going to be snooze fest in the morning. You'll probably see some volatility here as traders look and see what the reaction overnight was. Remember, Iran's supreme leader was saying that this is going to be a night that'll be remembered for centuries. Speculation that the U.S. is going to enter the war. So it really left the markets on a jittery front last night. We saw a bit of liquidation. No reaction in the gold market, though, and that much of that was because the dollar index was rising significantly, and I thought gold did a really good job. It was the silver market that operated on its own animal spirits here. Copper continues to be resilient. Platinum futures continue to rise as well. Oil prices were up about 4% here. Now, when I woke up this morning, they were down about $1.50, trading back up to unchanged here as traders are coming in and buying the dip in that market. Now, we will have a bank holiday tomorrow. We should technically be off work, but some of these markets are going to be trading electronically. A lot of them will be completely closed on the markets. I'll probably do a video because there's just too much news flow and headlines coming out. We'll also update the chart pack and look at tomorrow as a day to catch up on some paperwork and some research and things like that. So you look at gold in this holding pattern right now. So, you know, intervention of the conflict would widely potentially push gold up through that 3,500 seen in April. And the market is looking at some of the economic data like retail sales, housing, and industrial output, which really pushes the case up for the Federal Reserve to cut rates. And that's where that September interest rate cut really started to move. So a major war in the Middle East, though, could be quite inflationary. So that would actually reduce the chances of an interest rate cut. So we're looking at a few different things going on right now that are really driving these probabilities and whatnot. So silver, look at the technical analysis on silver. So you look at a daily chart on the silver market, taking out $37, first time since 2012 here. And again, I said that market goes up, consolidates into a perfect flag pattern. Traders get a bit bored on it. Market starts to break out above the flag pattern. And what you see is an extension higher. So silver has been really operating quite technically well here from a chartist standpoint to the upside. Now looking at crude oil, obviously shut down the Straits of Hormuz. You're going to bottleneck and you're going to actually capture some U.S. boats within the Straits of Hormuz. Could really escalate things quite high. That's where you get your oil prices spiking to the $100, $120, $150 mark. So you see a lot of options volatility and options premium in the crude oil market really taken off to the upside here. Looking at the industrial metals, copper was under some pressure here yesterday before bouncing back and near one of the highs of the session. So, you know, traders are still weighing in the risks of the escalation, obviously in the Middle East, but against those signs of tightening spot supply. So far, copper's up about 10.5% this year. Significant decline in the inventories at the LME. and the stockpiles that are readily available. So they've decreased about 80% this year, and a lot of those imports have come straight into the US here to try and beat any potential tariffs. Potential tariffs on silver, that's something we might want to start, trying to track if there's any kind of news flow on anything like that, because if you get all of a sudden that copper discussion, that's going to lead the charge and silver is going to play catch up. Remember, we want to look at silver against a few different metals here and some of the different ratios. So you look at the exchange traded funds, they added 229,000 troy ounces of gold. That was the fourth straight day of growth. And when did that conflict start? Well, really, it was like coming into like Thursday, Friday. And of course, you're getting people buying the dip on that gold market here. So longest winning streak since April of 2021. And the ETFs continue to flow into that silver market. As you get closer to things like 40, 45, 50, you're gonna see people come in and start to chase that market higher. So you get a big uptick here in the silver ETF flows, up 6.1%, gold up 7.7%. Platinum futures, although prices continue to increase, and we want to look at that chart pattern here, it's coming back into this formation where it looks like it could break back out above that 1300 mark. If you go on a multi-month chart, you go back to some of the historical levels, that would mark a double top on the platinum market here. So remember, platinum, thinner supplies that are out there, tough to get things to the table, new demand out of China, Chinese and jewelry for that platinum market. Who knows? Maybe once somebody buys platinum jewelry, they stick to platinum jewelry. You wear a gold ring, you wear a gold watch, you wear a gold necklace, you wear platinum, you buy the platinum Rolex, the Yachtmaster, and you end up with platinum rings, platinum this and that. So it could be just a change in the retail the retail consumers just taste and the way they go. Once people buy a Tesla, they tend to just stick with the Tesla. Despite what Elon Musk does, they still hypocritically stick with the Tesla, but that's a totally different topic here. So looking at the gold silver ratio, 91-1, continuing to break down here and continue to decline since Friday. Remember, above 100s has some kind of disruption. So really watch the start of the day here, watch the 8:30 open, see what people do. I anticipate you get a big explosive rally in the equity markets. You're gonna probably continue to see people trim some of those markets off. If you get any kind of peace deal in the Middle East, you're probably gonna see Bitcoin futures snap back pretty aggressively. Bitcoin is one, and this is my own personal opinion, I think that a lot of the holders of Bitcoin are very key connected people. I think that they're elected people. I think that they're senators, congressmen, people that are in the know of what's going on. And what I've seen recently is Bitcoin leads the market one direction and in the other. So if you look at when the tariff announcements were coming and the announcements coming into China that they were reaching an agreement, Bitcoin futures took off first. And now you're seeing Bitcoin break down about $3,000. The day before we saw Bitcoin futures surge quite a bit, it was about $3,000, $4,000. I believe that because of the cyber attacks in Iran and the banking system, there was a conversion of a lot of dollars into Bitcoin, getting it off of the system and things like that, because the Iranian military uses that main bank there for all their funding for their war efforts. So why wouldn't they just convert everything to Bitcoin? That way it's out of that system in case you get the Israeli cyber attack, which is what we saw. So now you get the war effort, you get a bunch of liquidation here in the market, and then if we get any kind of conflict resolution, you should see Bitcoin futures, in my opinion, rise back up to that 109, 10, 11,000. But you guys got any questions, shoot us a call. Tune in to Bill here. I'll be on CNBC on Friday doing the Worldwide Exchange, so the earlier morning program, discussing the dollar, gold, things like that. And then you got any questions, shoot an email at info@bluelinefutures.com. Remember, futures and option trading, it does involve risk of loss. It may not be suitable to all investors. Good luck, good trading.